In this video, I'm going to be discussing uh, with you how to trade like a robot so as to win like a professional. How to trade like a robot so as to win like professionals. You see, the forex market uh, has been established to be a market with high level of uncertainty. And because of this uncertainty, when traders come into the market, they come with a lot of emotions. Emotions like fear, emotions like greed, emotions like there's what we call fear of missing out, FOMO, fear of missing out, a lot of fear. You are just afraid, you know, of a lot of things because the market is uncertain. And this is why a lot of traders, especially struggling traders, a lot of them they end up losing money in the market and of course giving up on the market. In this video, I'm going to be discussing with you how you can trade like a robot so as you so that you can win or so as to win like professionals. You see, for you to trade in the financial market, especially the forex market, and end up winning, there's need for you to take up the position of a robot. And this is very crucial because if you don't trade as if you have been programmed, as if you don't have emotion, your emotion will keep coming up to override your decision making process, and that of course will lead to a lot of errors, which will lead to a lot of unexpected experiences in the market. So in this video, I want you to pay close attention. I'm going to share with you how you can trade like a robot. In fact, I'm going to use one of our trading model as an example. The trading model I will be using is what we call the cash flow money box trading model. At Potential Miners International, let me quickly run you through overview of our trading model. We have three types of trading models. Number one is the project model, where we trade the monthly impulse wave and we pick trade to take ratio 1:18, risk to reward of 1:18. The second trading model is what we call the investment model. This is where we trade the weekly wave and the daily wave, and this is where we take ratio 1:6, which means that our risk to reward on this type of model is 1:6. When you risk $10, you are expected to bank $60 on each of the trade that you enter with this model. Now the last one is what we call the cash flow model, and this is where we trade the cash flow money box, which I'm going to be using as an example for this particular video, and the news release framework. So we have two frameworks under the cash flow model. The first one is the cash flow money box framework, and the second one is the news release framework. Now I'm going to be using the cash flow money box model as an example to explain to you on how to trade like robots. Now if you overview or you just picture what a robot will look like when it comes to trading, you will notice that it will be as if you have been programmed with some set of rules that until those rules are met, you will not take action. You see, if you program a robot to trade and you program those rules in the system of the robot will not be moved by panic, by emotion, by any form of emotion outside the rules that you have programmed into it. So for you to trade like a robot and win like professionals, it means you must first of all identify your set of rules. And I'm going to be using our set of rules for the cash flow cash flow money box framework rules. So the first one is this cash flow money box framework rules. This is the first rule. The first rule says that you must ascertain your directional bias. So directional bias, and this you will do on the weekly chart. I want you to follow me closely so that you will understand whether it's really possible for you to trade like a robot or not. You see, now given that you have these rules set out, and of course I'm still going to list other rules, but the first rule says that you must identify or establish your directional bias on the weekly chart. So for you to take up the position of a robot, it means that you will have to check the weekly chart and ensure that you can define the directional bias of the market or the currency pair or asset that you want to trade per time. And that is the first rule. Once that rule is defined, every other thing will have to align with that particular definition of the direction. This is very important and it's like you are programming your subconscious. Once these rules are met, that is the only time you take trade. Otherwise, there is no trade. So let's move on. The first rule is that you want to check what is my directional bias, and you are going to do that on the weekly. The second one is you want to look at the market orientation. You just have to have understanding, idea of what is the market orientation, and you are going to do that on the monthly chart. I want you to follow me closely. The third rule says that now that you have ascertained your directional bias and you have taken an overview of the market orientation, you need to now define the market structure. Market structure. Market structure. And you are going to do this on the daily. Don't worry, I'm going to take you to the charts. In fact, I took a trade this morning, and I'm going to use that trade as an example. How you will see how I ensure that I wait for all the conditions as if I'm a robot, as if I've been programmed to just pick trade. There's no emotion, there's no I feel like, there's no I wish, there's no I maybe it's not going to pick me, maybe it's not going to get to where I set the entry. You are to just trade and set your rules or set your trade based on the rules as if you are a robot. And until you can trade like this, you will not make money like professionals. So the fourth rule says once you have defined your market structure, and of course that is going to be done on the daily, the next thing you want to identify is your money box, cash flow money box, cash flow money box. Don't worry, we are going to do this together on a particular live trade. The trade is still running now, and you will see how it played out. And you are going to do this on the 4 hours chart. You see how I'm taking my time to spell out the rule. Now, the last rule says that you are now going to identify your entry box. Entry box. And you are going to do this on the 1 hour chart. You see that, or 1 hour time frame. So these are the 5 rules that back our cash flow money box trading framework. And of course, for you to trade like a robot, suppose you want to use this particular trading framework now. First thing you are to do is, and we are going to go to the chart now. I picked this trade on gold, and I'm going to use this as an example. I want you to follow me closely. So you get to gold. The rule says you will just assume that you have been programmed. That you have been programmed, and of course, when you are programmed, you are not to use your own personal emotion. You are now a robot now. You go to the weekly chart, you want to identify or establish the directional bias. If you have been following me on this YouTube channel, you will notice that I've explained how to use this directional bias gauge. Is a free tool, and of course I said it that for as many that want the setup, you can make request in the comment section. I'm going to send it to you. It's a free tool, and this tool is going to show you your directional bias at a glance in less than 5 seconds. Once you open the chart, you can identify that this is the directional bias of this particular asset. So the overview of the market for gold now is that the gold is on a bi-directional bias, which means, and this is because the price is trading above the cloud, and it has been like that since December 2023. You know, gold has been on a bi-directional bias. Now, for you to overview the directional bias as a robot, what that means is that you will only take a buy on an asset that the directional bias is a buy. You are not going to be thinking maybe it's going to sell very soon, maybe it's going to come down very soon. Once you check the directional bias on the weekly chart now, and you notice that it's a bi-directional bias, you are going to program your subconscious as a robot that, okay, on gold, I'm going to be looking out for a buy setup. You see that now? And if you are to program a robot, that is what the robot will do for you. Once you set it as a rule or a program or a code that only take trade for a buy when the directional bias is a buy, the robot will not do otherwise. So let's move to the second rule or condition. You want to look at your market orientation. This is just to overview, the likely, position or the likely place that the market will be going. you know just to overview. And of course, I've done a video on this. Is either you have a markup, which is an uptrend, or you have a markdown, which is a downtrend, or you have an accumulation orientation or a distribution orientation. Now, on the monthly charts, when I overview, of course, like you can see, this is a markup market orientation. And what you need to do when you get to the monthly, just look at the predominant market orientation. You don't need to struggle, because you are not going to be taking trade based on this market orientation, as it were. You just want to know what is the market doing predominantly on the monthly. So this is a markup, and of course that means that the market is more on an upward trend. So rule number 2 has been checked. Rule number 3 says that you will move to your daily chart now. Do you see how you are going to be trading this, one row per time, and you are going to be doing this like a robot? So rule number 3 says that you must establish or define your market structure. Market structure, this is very important. Market structure, this is very, very important. You see rule number 3 says market structure on daily. So you come here, you will ensure, if you begin to draw, let's draw from here. There was a break of structure here, break of structure bullish. You can see that there was a break of structure bearish here. You see this? There was a break of structure bearish here too. I want you to follow me. Follow me. This is how you do it for daily. And I saw another break of structure bullish here. And you will notice that our market directional bias says we should buy. And of course, because the directional bias says we should buy, we are only going to be looking for a buy setup on gold. Now, the market orientation must be in alignment with the directional bias. So on gold now, the directional bias is saying buy. Now we had this trade happened today. This was the candle for yesterday, and of course, because this particular candle closes above this particular high and created a break of structure, I now confirm that, okay, rule number 3 has been confirmed. There is an alignment between the directional bias on the weekly and the market structure on the daily. So we move to the next rule, which says that you are to look for cash flow money box. Cash flow money box. Let me, so that you will, cash flow money box. Immediately after your market structure has been aligned with the directional bias, you go to the 4 hours. Any break of structure or other block that you can see is your cash flow money box. Cash flow money box. This is your cash flow money box. You see it now. This other block is your cash flow money box. Is your cash flow money box. Then you wait for the market to price into the cash flow money box, then you move to your 1 hour. This was how I picked the trade. You see the market priced into the 4 hours cash flow money box. When you get to the cash flow money box, or in another words, when the market priced into the cash flow money box, you are waiting for an engulfing move. This engulfing move must be minimum of 2 consecutive candles. You see it now, and that happened around this place. And this is what will form your entry box. Entry box. This is how you are expected to trade day in, day out if you want to use this cash flow money box trading framework. This is just a framework of a particular trading model. I said it that we have 3 types of trading model. So for cash flow trading model, this is one of the frameworks that we use. And of course, you are expected to take your trade from here. I pick the trade from here. Your stop loss will be below the money box, and you are to take ratio 1:3. For cash flow model, we are only taking ratio 1:3. You see that now? And the trade picked. In fact, the trade almost stopped me out. I'm going to let me clear this and show you how I marked it. How I marked it. See, I have a group. Okay, you see it now. This was the trade. This was the marking of the trade. And the trade picked me around that place. You see it now. It almost stopped me out. And of course, suppose the trade stopped me out, there's no panic because I've followed all the conditions. You see it now. And the trade is already in profit now. However, like I used to say, even if this trade ends up to be a profitable trade, it is not a proof that the trading system at Potential Miners International is profitable. Why? Because you cannot make your judgment on the basis of one trade. However, if this trade closes as a loss, of course, just like the same if it ends as a profit, you cannot use that to judge whether this model is failing or not. You are expected to take 20 trades before you can conclude that a trading system or a trading strategy is not working. So for us at Potential Miners International, this is how we view the market. If this trade, after following all our rules just like a robot, no emotions, no panic, no fear, no greed, after following all our trading conditions, if this trade end up as a winning trade, we have only fallen on the positive side of probability, nothing more, nothing less. And of course, if it end up as a losing trade, it means that we are falling on the negative side of probability. This is the mindset that you need to incorporate into your system that will now make you to view the market and trade the market like a robot. And if you can do this such that there will not be emotions, there will not be fear, no form of fear, no form of greed while you trade. You'll be trading like robots, and of course, believe me, you will be profitable and make a lot of money like professionals do on the long run. And this is why I said that it is possible for a human being to trade like a robot and win like a professional. I wouldn't know if you feel that you want to be a part of our trading system. Of course, the door is always open. You know, you might need to contact us if you want to learn more on how we, position for trades like this. And of course, you want to learn other trading model. But just knowing that if you want to make money like the professionals, you must have a set of rules, and those set of rules must be like a programming that you have infused into your system. And until those set of rules are met, you will not enter trade. And of course, when you enter the trade, you are not to tamper with the trade except your trading rule says that adjust this stop loss when the trade gets to this level. Once you set your rules and you enter the trade based on the rules, leave the trade to run. This is how you can make money in the forex market. But if you want to be trading with emotions and be thinking it's going up, it's going down, you are not going to make any money. In fact, on the long run, your conclusion will be that forex is a scam, it's not going to work. So I encourage you, if you feel you want to trade in the financial market, especially the forex market, you must learn how to trade like a robot so that you can win like a professional. Till I see you again in the next video, I remain Mr. Akimbode, the king of waves. Thanks for listening. God bless you.